US President Donald Trump's comments on imposing more tariffs spooks the trade. The broader markets take a bigger knock with mid and small cap indices falling 2 to 3%. All sectors end in the red, led by Realty and the metal index.
The rupee falls sharply in early trades, but then stages a marginal recovery. The fall was on the back of Donald Trump's reciprocal and steel tariff threats. Dealers believe pressure on the rupee is likely to continue.
Axis Bank's MD and CEO Amitabh Chaudhry believes the RBI measures are only enough to take care of liquidity deficit and that they are not leading to any surplus. Meanwhile, Mahindra Group CEO and MD Anish Shah says he's upbeat on the new EV launches and that rural demand is looking good. Hello and welcome to a fresh edition of Markets Forward, your go-to show where we aim to get you up to speed with regard to today's trading action and set you up for tomorrow as well. I'm Nigel and with me is Surabhi. Well, Surabhi, a bit of a down day. Though towards the end, at least on the headline index, there was a bit of a pullback.
We both got the color wrong. The market was nowhere close to being in the pink of health, right? But yeah, I think it was a tough session. And what stood out for me, Nigel, was that while this whole tariff conversation is a global conversation, we got hit a lot more than some of the other markets. So actually, let's just start there. Even if you're looking at the Nifty's chart, then, this was a day where we've seen all-round weakness, though there was some attempt at a pullback right at the end. But nonetheless, I mean, it's a 180-point kind of a knock on the index. And this is, remember, last 3 days of the last week also the market was struggling. We've been making lower highs for the last 4 days now, including today's session. So that's, an area of concern. And the mid-cap market is where the pain really was. That's what was sort of bearing the brunt of the fall. The index was down 2%. The advanced decline ratio was down even more. And sectors, we'll get into more details as we go ahead. Metals, PSUs, real estate. I mean, these are the favorite whipping boys of the market off late. I just want to take up two stocks as examples and then we'll dive straight into, talk about the nature and the texture of the market. Erstwhile favorites are being whipped around in this market without, by the way, any major misses in numbers. Trent was that example from last week. And, running into today, we're talking about a stock like PG Electroplast, which has been the erstwhile favorite poster child of the EMS space, and the numbers are fine, but suddenly the market is just beating down names where valuations are high. So this is a very different market with perhaps a very different mindset, Nigel. So I guess painful start to the week, one would have to say.
Well, that's right. Painful start to the week. But if you want to clutch onto one positive, it'll be that at least on a closing basis, we defended the 20-day MA.
Yes.
I think the crucial support now is at around 23,250 to around the 23,300 odd mark. That's a crucial band. At least for today, we did defend that one. But let's get straight to our first segment of the day. Vivek standing by. He's going to tell us all the stock movers of the day. Vivek, take it away.
Well, good afternoon. Not so much to cheer as far as the market is concerned, especially as far as the broader end of the markets, the advanced decline ratio was quite weak. But looking at the set of stocks that did quite well, in fact, select FMCG names, and in fact, the top gainer today as far as the Nifty was concerned was actually Britannia. Cooled off a little bit in the last hour of trade, but again, select FMCG names, especially in the first half of the session, did quite well. The other stock that did quite well from the broader end of the markets was actually Vatek Baba. Cooled off a little bit, but this particular stock, after seeing an order cancellation from Saudi, once again got a very large order from Saudi again. So that particular stock doing quite well in the session today. Kotak Mahindra Bank, saw a very strong close as far as Friday was concerned. Today built onto those gains and closed higher by close to 1.5%. And Engineers India, although the top line was quite muted, Q3 results saw significant margin expansion, and that stock from the broader end of the market is doing quite well. But on the other hand, quite a few laggards as well. Have a look at Trent. This particular stock continued its falling pattern, almost 5% lower today as well. And like you just mentioned, this particular stock has been in a free fall, especially in the last 15-20 trading sessions. The metal pack, again, something that you alluded to, the entire pack today was under pressure. A lot of news flow, plus significant selling pressure. Look at names like SAIL, Vedanta, Nalco, all of them down, anywhere between 4 to 5%. Alchem Labs, another stock from the broader end of the markets, the healthcare universe did see significant selling pressure. Alchem Labs, even though Q3 results were quite strong, especially on the margin front, the management did not raise the guidance, and the street didn't like that, given the fact that that implied a muted Q4. And lastly, have a look at Delivery. A seasonally strong quarter is what the street anticipated, but it was a muted quarter, and the stock that was already under pressure, and had been an underperformer, saw further selling pressure today. Again, one of the top laggards as far as the broader end of the markets was concerned.
Okay, all right, Vivek, thanks very much. Indeed, what a difficult day today for the Bulls. Let's now straight away head across to Nimesh for today's, D-Street chatter. Nimesh, what did you pick up around this fall? Neither is the FPI selling, reducing, and, levels are not really holding in the last couple of sessions.
Forget the Nifty part. The bigger pain today was in the broader market names. The mid-cap index, small-cap index, both ended 2% lower. The breadth was quite weak as well, right? A lot of individual names in the broader markets were down 10, 12, 15%. I guess what's clearly happening is the reset of multiples in the broader market stocks. All the stocks rallied pretty hard. They're trading at very expensive valuations, and now that's a bit of reset happening across the broader market stocks. So in terms of flows, I don't think there is a very large sell-off from the larger FIs, or for that matter, DIs as well. There was selling in select banks, but equally buying in the tech names as well. So that sums up the kind of market which was there. Clearly, selling in the broader market names, and the breadth was quite weak as well. In terms of individual stocks, though, the first stock on my list was Wipro. In a weak market, that stood out. There was buying interest from larger FIs in Wipro, and expect high delivery volumes in the IT names, and within that, Wipro stands out. So that's the first name. The second is Tata Motors. Again, a large cap name, under pressure of late, seeing a lot of selling as well. But now at these levels, after the sharp sell-off, there is a bit of institutional interest back as well. So there are buy flows, and some HNIs as well have been active buys in Tata Motors at these levels. So that's the second name. Aegis Logistics, the other interesting name. It was under pressure today, down 5%. Has been seeing selling pressure as well. I understand a leading long-only fund has been an aggressive seller in Aegis Logistics, and hence that stock saw a bit of underperformance there. And the last is Cummins India. After the results, some sort of pullback is there. There is buying as well from larger FIs, is what I understand, in Cummins India at these levels.
Okay, all right, Nimesh, thanks a lot for that. Well, let's focus on the rupee. It fell sharply in early trade on the back of Donald Trump's reciprocal and steel tariff threats. Lata joins us to fill us in with more details on that. Lata, over to you.
Well, it was mayhem in the morning because the rupee opened almost at 88, 87.9550 to be precise. Now, it appears that this was not very out of sync with other Asian currencies because some of them did fall about 0.8%. The fall in India at 87.95 would have worked out to about 0.6% fall. And there were ringgit and all had also fallen around the same number. And that's because obviously tariff talk, two kinds of tariff talk. One was reciprocal and the other tariff threat that came was on steel and aluminium. And therefore, obviously, a lot of Asian importers were impacted. But when it opened at that big number, the Reserve Bank appears to have made inquiries whether this is really importers coming in and buying or FPIs buying dollars, and noting that this is more position taking by what you can call speculators very loosely, but largely banks. They went in and they supported the rupee like hell. People are talking about $2 billion. Some are talking even $3 billion. But it clearly looks like a Reserve Bank support because it vertically fell the dollar from 87.95 all the way to 87.56, 57. There's been more or less stable at that level. Now, you stock market guys are lucky. You'll get some 22,800 support and 23,800 resistance. When we try to ask these questions of traders, forex traders, the level, they themselves tell us the levels we gave you, 87.50 at the beginning of the year, as level that will be reached in March, and 88 by end of the year, are all today, have hit today. So where do you go? At the moment, there's a working figure of 82.25 by March and 89 by December. But who knows? These levels could be just, erased in a day.
No, that's right, Lata, take that point completely. Actually, over the weekend, RBI Governor Sanjay Malhotra had said that the fall in the rupee is due to Trump-related tariff policies and that the Indian Central Bank will only manage excess volatility. Listen in.
Most of the depreciation is driven by the uncertainties which have come about because of the global and especially the Trump related tariff announcements. And hopefully, that should settle down, and that should help us in the downward movement of inflation. For the rupee price depreciation is something, which the market forces, as I mentioned, determine. We have a number of instruments at our hands to control and manage liquidity.
Well, President Trump had announced his plans to implement 25% tariffs on both steel as well as on aluminium imports. Remember, in the reaction to Trump 1.0 tariffs, initially we did see a surge both in steel prices as well as in Midwest premium on aluminium. However, the reaction to the metal index is negative today. This is because the risk sentiment was risk off today, and that was what took center stage. The fear is that tariffs will be detrimental to sentiment as well as demand globally, which is not good for stocks, obviously. So there are many variables that are at play. Let's focus on steel first. And the US imports of steel was roughly around 28 million odd in 2024, with bulk of the imports coming in from Canada, Brazil, Mexico, South Korea, as well as at Vietnam. Now, Indian steel producers' export into USA is very, very minimal. But the fear is that the steel earlier imported into the US could be dumped. For example, Vietnam exports into the United States, it doubled to 1.3 million tons. That is in 2024 in comparison to 2023. However, some believe that this will act as another reason to strengthen the ferrous company's demand for some kind of safeguard duty. So that's the optimist way of looking at it. Moving to aluminium then, the US imports of aluminium was roughly around 5.5 million tons in 2024. Canada, they accounted for more than 50% of the aluminium imports into the United States. However, the impact on the Indian aluminium players, what is that? Well, the rupee will see some kind of weakness. Also, as I mentioned earlier, the Midwest premiums will move up. So aluminium producers will gain on pricing. But there could be a ripple impact on demand, which in turn will hurt Novelis. Things are still very, very fluid as there is still clarity awaited on the date of implementation with regard to these tariffs. Will there be concessions in some countries? And also, how will these countries reciprocate is going to be important. For the time being, it was a sentiment negative and pressure tactics from Trump that weighed on metal stocks in today's trading session. That's why that was the top loser.
Okay, yeah, explains the heavy pressure on a lot of those metal stocks, ferrous and non-ferrous. Well, we have to take a quick break, but as we do that, let's talk about brighter things and happier things. And that was the commentary that came in from Mahindra and Mahindra this morning. We were in conversation with Anish Shah, Group Chief Executive Officer and Managing Director at the Mahindra Group. He spoke about a whole range of issues, including some of their latest electric vehicle launches and, of course, the pickup in the tractor segment, in the tractor business. Take a look. We'll take a break and we'll come right back.
Margins will be slightly lower to start with because you would expect that with a new product, also because it's electric. And we will be showing margins separately for ICE versus electric. And over time, they will catch up because that's where the investments come in for. And we would expect margins to be similar to ICE in the longer run, but it will take us time for us to get there. Our target, and we have been fairly audacious in what we do, is to get to 40% in every segment we play in. So yes, we have a while to go, but that is part of the journey. So we do see a lot of green shoots in rural, as we've talked about earlier as well. Yes. For the fourth quarter, we expect 15% growth year over year, and that's a very healthy growth in this space. For next year, a little early to say as yet, because it will depend on this particular season and how that goes as well. Okay. But overall, we remain fairly optimistic about where rural is right now and prospects for a tractor business next year.
Welcome back. You're tuned into Markets Forward. Well, Surabhi, today I think the highlight of the day was that chat that we had with the top brass at Axis Group. Tell us more. No,
absolutely. And it was a very interestingly timed conversation given the market that we're in the midst of. And Axis, of course, going to be having their investor conference very, very soon. So ahead of that event, today we sat down with Mr. Amitabh Chaudhry of Axis Bank, who spoke about the impact of the RBI rate cut that we saw last week and why he thinks that more liquidity measures are perhaps still needed. We also caught up with the Neelkant Mishra and discussed the potential fallout of US reciprocal tariffs on India. And we also had Atul Mehra, who heads investment banking at Axis Capital. He's also the MD of Axis Capital itself. He highlights the risk of high equity supply in 2025. He says that the market could end up seeing $50 billion of fresh equity supply. The question is, can it be absorbed? Take a look at this very interesting conversation, and we take your leave on that note on this edition of Markets Forward.
Our view is that we have to keep watching the risks quite closely. The credit growth and deposit growth remains muted. RBI has assured during his monetary policy announcement that they will provide durable liquidity, and they do realize that the credit growth does need to pick up for the GDP growth rate to come back to the 6.5–7% range, and that's an important element of that. So hopefully as RBI takes these measures in the next couple of quarters, we'll see a positive movement. But right now, I mean, while we are optimistic about what could happen, we remain cautious because the real scene on the ground is we are not seeing enough movement at this point in time. You know, as all of us have been pointing out, if the growth slows down, if rupee depreciates, and it has depreciated so rapidly, if global uncertainty remains, tomorrow exports could get impacted, if let's say tariffs come in, we cannot say that, by the way, this will not extend to secure forms of business. We are in the risk-taking business. The credit costs are normalizing. We have seen some, obviously stress in some of the sectors. We have to be watchful and cautious that this should not extend to other asset classes also. No, I'm not suggesting that RBI goes slow on some of the measures they have taken. I'm just saying that some of the measures, and individually the measures, have been in some cases so tough and tight. The credit growth has dropped to a level where, obviously you are seeing some signs of stress develop, or it is having an impact on the GDP growth rate. If this same credit growth could go back to 14–15%, it will have a positive reinforcing message in the overall growth rate of the economy, and some of the stress in the system could also go away. I'm not for a minute doubting what RBI said. I'm just saying we need to wait for those measures to come out and play out, and then hopefully we'll see positive signs. I'm quite optimistic. But the measures RBI has taken on liquidity have been sufficient enough to take care of the deficit in terms of liquidity. They are not led to any surplus liquidity.
If we can get liquidity into the system, if we can get credit growth to start moving up, we will start to see, I think, the domestic economy reviving. If we are able to revive credit growth from 11 to 14–15%, I think we should be able to see a significant rebound in economic momentum as well.
23, we saw total activity of around $15 to $18 billion. In 24, we saw around circa $40 billion. In 25, we could see as high as $50 to $55 billion of sale through various corners. So that's the supply that is going to hit the market. As long as we have the domestic flows which are robust, and there the key indicator to watch out for is the SIP flows. I think as long as the SIP flows are adequate or in line with what we are seeing, we have no reason to be worried or concerned about.